Just for the online media earnings season outlook, on the day of the announcement, stocks I think are probably vulnerable to some disappointment around the outlook statement are probably REA, Seek and Domain. All of those have had trading on really high multiples, had a big re-rating over the past 12 months. So, there is some risk that their outlook is not as bullish as the market hopes. But in the case of both REA and Seek, I really like the long-term story still. So I see any sell-off as providing a buying opportunity there. Amongst stocks, I don't expect a big reaction on today's car sales. It's got very modest expectations for FY18 and 19. It's trading at a discount to the sector, so I don't expect much movement out of that. Stocks that are priced for disappointment with very low expectations are Redbubble, Frontier Digital and iCar Asia. I don't see any downside risk in them in the results and significant upside potential over 12 months. Just REA Group. The market in this stock always focuses on the commentary around total listings, which are down slightly on the last year. And this always confuses the market. REA doesn't make its money out of total listings. It makes its money out of paid depth listings. And just to give you a feel for that, over the last 6 weeks, Premier, their most expensive ad, the volume's up 20% year on year. Other depth ads are up 6%. They had a 10 to 15% price rise in July. And to give you some extra flavour around about that, in the last 6 weeks, New South Wales Premier ads are up 24% on the same time last year. Victoria Premier ads are up 19% on the same time last year. So on the day of the result, they might say, it's listings volume are soft, and people will take that as a cue for selling. But in fact, the main drivers of the business are extremely positive. So I see any pullback in this stock as a buying opportunity. Our roll forward valuation on our current numbers is $90.67. So if it gets beaten up on the day, certainly an opportunity to get that stock on the cheap. Going on to Seek. Seek has re-rated really strongly over the past 6 months following their competitor, 51 Job in China, to increase their prices by 30 to 40%. The market has built-in expectations that Seek's subsidiary in China, Xiaopin, will follow suit with a big price rise, but that's not necessarily the case. Seek's been telling us that they have a policy of chasing volume in the SME market in China. They may only increase their prices gradually. So that creates some risk of disappointment around their guidance statement, and it gives some risk of downgrades to FY19 numbers. So that stock could get hurt on the day. However, and that chart there just shows you average yield per customer in renminbi in China, just showing the gap in prices between those two that's emerged over time. I see any pullback to around the $19 level would be a buying opportunity. I still do like the long-term story in Seek. There's a lot more long runway left in that stock. Moving on to car sales, volume of listings, they're in the 20k plus cars, and traffic volumes are up mid-single digits. So they should be able to meet market expectations for FY18. We're expecting their finance business to show some sort of modest improvement. Again, in FY19, they've got a bit of a tailwind in that they acquired the balance of Korea this year. So next year they'll get a full year of the Korean business, which will, give their growth a boost. It's got the lowest multiple in the online marketplace sector, so low expectations. It's got a competitive landscape's benign. So still happy for people to accumulate car sales at this level. I don't see a lot of risk around the result. Moving on to Redbubble. They've already reported their revenue and their EBITDA numbers, and they've made an FY19 forecast. So we're not expecting any surprise from the result. They're predicting EBITDA of $2 to $4 million next year, and they're going to consume less than $2 million in cash after CapEx. If they come close to FY19 guidance, I see no reason why this stock shouldn't go back to roughly the multiple we floated them on, which is 2 times revenue or 2 times annualised rolling sales. That would imply a price target of $2.30 versus our current DCF of $1.91. So all I have to do is to hit those targets they've made, and I think this stock will be quite a strong performer over the next 12 months. Moving on to iCar Asia. This has been, as we all know, it's been a great disappointment. They had a whole lot of things went wrong. They're now getting everything right. and the management is forecasting an exceptionally strong September quarter. A lot of things going for them at the moment. They're predicting Malaysia and Thailand will be cash flow break even by Q4, and the whole company to be cash flow break even by the end of 2019. Just showing you how this company's increasing their power. They raised their prices 33% in May. And they are expecting to be able to increase prices again next year. So it's been quite a weak stock in recent times. But I think that once we see those third quarter numbers, we'll see some people coming into this stock and drive that share price higher. And just last but not least, Frontier Digital. The share price has been very weak lately. And the reason for that is being held back by Pakistan. Pakistan represents about 45% of our valuation. A lot of economic uncertainty and currency instability there following the re-election of a new government. And the fact that the previous government had basically emptied the coffers and didn't have a reserve plan. Now Pakistan's having to reach terms with the IMF on a refinancing package. So while that's going on, the share price is very weak. We do expect that they will pull off some sort of deal with the IMF, which will calm people down. This company's created significant value since listing, and they're well ahead of their own schedule. They aim to have 6 of their 15 investee companies at break even in 2019. They're trading at a massive discount to our valuation. Our valuation's 99 cents versus last close of 56.5. Assuming the government there is able to strike a deal with the IMF, I see this stock price rebounding. That's a rough summary of the way I see the online sector.